Welcome to Save U.S. Taxes Legally. I'm going to start off with 3 simple questions. In the chat, please put yes, or if you don't agree, please put no. First question, do you want to save U.S. federal, state, and income taxes year after year, generations after generations, and leave a legacy? If you're interested in that, please put yes or no into the chat. Number 2, do you want to make sure all your information is kept completely private? Nobody knows what you own, where you own it, how much you own, what you do with it, how much you sell it for. If you want to say yes, again, please put that into chat. Put no, it's your choice. And question number 3, what if all lawsuits become frivolous and go away? I can't stop you from being sued, but think about how much time, money, anxiety, and worry just go away. If you want to learn more about that, please put yes into the chat. Put no, it's your decision. What I'm going to teach you tonight is the secret of the rich. It's legal. It's in the IRS Tax Code 643B. It comes from England way back when King Henry VIII, that famous king who chopped off his wife's head, started the Church of England. He went to go tax the lords and ladies of England. They went back to the 12th century, the Magna Carta, and said, oh, no, King Henry VIII, you can't do this. It's contract law. It came to the colonies while we were still part of England, and the law firm I work on behalf of inherited a trust that's turning 365 years old this year, 2026. Our country is going to celebrate its 250th birthday on July 4th. Our current tax structure that we're under went into effect February of 1913, and the only thing it's done since then is grown and grown and grown and grown. The super rich families of 1913, the Rockefellers, the DuPonts, the Carnegies, and the Kennedys made sure they could save taxes. Well, if they can save taxes, we can save taxes. Hi, my name is Sally Gimmon, and I'm the owner of www.thetrustisyou.com, and I want to teach as many people as possible the secret of the rich. Let's get this started. I'm going to share my screen. It's a new computer. There it goes. There it goes. Sorry about that. It's a new computer. I'm learning new things. So the Spendthrift Trust is going to save you federal and state income taxes. Keep your information 100% private. Unfortunately, 40% of LLCs, S Corps, and C Corps get sued every single year. It's like playing Russian roulette. And I can't stop you from being sued, but all lawsuits become frivolous. So let's go to the next page. Now, this is the 2026 federal income taxes. Most people are unaware there's 4 ways to file. The most expensive way is single. Then there's married, head of household, married filing separately, and the cheapest way is married filing jointly. Then there's 7 different tax brackets from 10% to 37%. Now, on January 1st of 2025, the IRS changed married filing separately to match single all the way up to the 35% tax bracket. If you learn nothing else from this, if you're married, please file jointly. It's going to save you taxes. Now, it's in IRS Tax Code 643B. If your financial advisor or your CPA says, ooh, the IRS wrote a memo. Yes, they did. On August 9th of 2023, the IRS wrote a memo. It's 15 pages long. If your financial advisor or your CPA is telling you about this, ask them to send you the whole 15 pages, because on each page at the bottom it says this is not tax information. But the IRS literally says it does not like Tax Code 643B. It does not like the Irrevocable, Complex, Discretionary, Non-Grantor Spendthrift Trust. Well, it's a memo, people. It's their opinion. In my opinion, the worst vegetable in the world are lima beans. You can't swallow them whole because they get stuck in your throat, and you have to chew them, because if you try to cut them, they bing all over the plate. So let's go over these 5 elements. You need all 5 elements to make this trust work. Irrevocable. This means it goes from generation to generation to generation. The Rockefellers Spendthrift Trust, it's called The Office. It's 7 generations old and has over 400 people under the same EIN, or employee identification number. Each individual family files a separate 1041 tax return. The money is not commingled. That's important. Complex. This trust can hold money from day to day, week to week, month to month, year to year, decade to decade, century to century. 97% of the trusts sold every year are what's called the family trust or the living trust. There's nothing wrong with the family trust or the living trust. It's designed to avoid probate, and then it dissolves. My mom and dad had one. Susie Orman talks about this on PBS television. What I'm talking about is what the rich have. The Spendthrift Trust is going to save you federal and state income taxes. It's going to keep your information completely private. Can't stop you from being sued, but all lawsuits become frivolous and go away. And if you're over 65 and on Medicare, it stops the IRMA surcharge on Parts B and D. Discretionary. Whoever is a trustee or trustees can make the rules for all the beneficiaries while they're alive and then also from the grave. There's no infighting, there's no contesting the will or anything else. Now, a true story, a client of mine, a husband and wife who have 4 apartment buildings in Los Angeles. One of their daughters has a drug problem. She's living rent-free in the one of the apartments, but they're requiring her to do 4 random drug tests per month. She actually took her mom and dad to federal court to sue them, saying it was unconstitutional. The judge read over the trust, and he said, you have 2 options. Move out, start paying your own rent, or stay in the apartment and pass the drug tests. I do not want to be invited to their Thanksgiving dinner. Non-Grantor. This makes the trust 100% private. You are going to have someone who will never be a beneficiary and who will never be a trustee sign up to be the grantor or the settler. This is not a speed bump, but you do need their social security number. If you have problems with this, I've done this for several of my clients. It's just, you sign up to be a grantor, and then you sign yourself away from being a grantor. It's an easy thing to do, and I've done it for several of my clients. And then the last element, the spendthrift. This has been in front of the United States Supreme Court on 2 separate occasions, and it's won both times. It's in Black's Law Dictionary. And then if you're an attorney, it's also in Scott's law book that you can research more about this. Again, your tax preparers do not read the tax code. They only know about how to file taxes. There are over 1 million attorneys in the United States currently, and only 4% are tax attorneys. A textbook they study in law school is called Scott and Asher on Trust, 5th edition. The law firm I work on behalf of has 5 trust attorneys on staff. Now, Paul Benson was a Harvard law professor who wrote 5 specific trusts to save specific taxes. You're not tax-free. The first one is the business trust. This is for anyone who makes business owners, entrepreneurs, franchisee owners, professionals, and self-employed. You'll stop paying federal and state income taxes year after year, generation after generation. There's the beneficial trust for investors to stop paying taxes on profits. There's the mineral rights trust. I've only sold one of those. That if you have oil rights, shale rights, or coal rights. One of my beneficial trust clients inherited his granddad's horse farm in Oklahoma. On the horse farm, there are 6 functioning oil wells that the revenue goes through the mineral rights trust. Then there's the charitable trust. Several of my clients have saved so much in taxes, they start their own charities. And finally, there's the senior trust for anyone who's 65 or older and incapacitated. They've had a stroke or they have dementia. So the business trust, this is an actual client. He's in Rhode Island. Husband and wife, they run a franchise sub shop that they filed jointly. They made $985,000 in 2024 taxes. So this was 2025. They started their trust. I changed the numbers. I still use $985,000, but I changed it to 2026 taxes. In federal income taxes, they'll save $286,614. And in Rhode Island state income taxes, an additional $59,001. For the full year of 2026, they started this trust in 2025, and for all of 2026, they will save $345,615. They can use this money to put back into their franchise or buy a second franchise. They could pay off their mortgage. They can buy a new vehicle. They can take their family on vacation. They have 3 children. They can start college funds for their 3 children. They can give to their favorite charity or save for retirement. This is their money. When you start any of the trusts, the business or the beneficial trust, you will have a separate EIN, employee identification number. We will give you a letter to the bank so you can go in and open up the trust. All your receivables are going to go into that bank account. You're going to make all your payments out of that bank account. In their sub shop, they have 5 employees who are W-2 income earners, so they'll cut their checks. They're going to save the federal and state income taxes, but when they cut the check for their 5 employees, the employees will they'll have to take out the federal and state income taxes. They're going to have access to this $345,000, but with a debit card or going into the bank to get cash out, and they will file a 1041 tax return. This will go from generation to generation. Worst case scenario, their great-great-grandchild in 2095 says, great-great-grandma and granddad were crazy. I'm going to cancel this trust. The great-great-grandchild will owe any taxes saved in 2095. He or she will not have to pay back any taxes from 2025, 2026, 2027, 2030, 2045, 2050, 2090. Any of those taxes are saved year after year. I don't know why the great-great-grandchild canceled the trust. Now, my personal story. My mom got sick when she went to my oldest nephew's wedding in Charlotte, North Carolina. I'm living in Phoenix. My parents were living in Goodyear, Arizona, 25 miles west of Phoenix on I-10. She got septic in the blood. She was on the ventilator for 13 months, in a hospital for 15 months, and then she came back. Other than missing 13 months of memory, she was perfectly fine. My dad stayed with my mom at my brother's house in North Carolina and visited her every day in the hospital. So I started my trust in my personal story on April 4th of 2020. My CPA called to say congratulations. In 2019, with my mentor, I wholesaled 7 bank-owned properties nationwide and paid off all my debt. My CPA said my tax bracket went from 22% to 24%, and all of a sudden I owed $98,000 in the taxes. It's the middle of COVID. I had nothing coming in, and his solution was to set up a payment plan, set a meeting with him, get on a payment plan, pay interest and penalties. My solution was to research how the rich save taxes. It took me 5 months, so I started both my business and Beneficial Spendthrift Trust in September of 2020. I bought this property in July of 2020 for $20,000 because I was going to use it to visit my mom in the hospital. Because of COVID restrictions, I knew between $20,000 to $50,000 at 24% tax bracket, I would owe $7,110. I moved this from an LLC to the trust by doing 2 simple bill of sales. One bill of sale from my LLC to me, Sally Gimmon. Second bill of sale from Sally Gimmon to the trust name. Got them both notarized. And I'm living in Phoenix, Arizona. I sent the 2 notarized bill of sales to the attorney in Raleigh. He asked for the first page of the trust, and when it finally went to auction on August 28th of 2021, the final bid was $64,326. Without lifting a hammer, I made $44,326. Ooh, this is the way I love to invest. But even more importantly, at 24% tax bracket, I got to save $10,368 on this one property, and I put it into more real estate. Now, the Beneficial Spendthrift Trust is going to save you the following 5 taxes. You will stop paying capital gains. There's short-term capital gains, which are just like federal income taxes, and then long-term capital gains, a year or more, they're either 15 or 20%. I'll get to that in just a second. Capital gains are when you wholesale, fix and flip, do auction houses, tax liens, you do options trading, you sell crypto, or you're a forex investor. Interest income taxes, if you're a passive investor, you're in mutual funds, you're in a REIT, you're doing subject to real estate, the BRRRR strategy. I have notes where I'm the paper in the house, people pay me their mortgage, I'm the Bank of Sally. Creative financing, seller financing, or forex investors. Forex investors, you get double tax. Yikes. Dividend income taxes. If you're in the stock market, you're a day trader, you're a futures trader, you're a commodities trader, or you're living off of dividends. Rental income taxes. If you have Airbnbs, vacation rentals, 5, 10, 15, 20, 100 doors. Maybe you're in multifamily real estate. You're in apartment real estate. You're doing commercial real estate, or you have Airbnb arbitrage. This is showing one side it's $50,000, second side it's $100,000. Depending on your tax bracket, this is how much you will save. year after year after year after year. I'm not trying to crow, but with my Beneficial Spendthrift Trust for 2025, since having the trust since September 2020, I've wholesaled 28 properties. I have 12 notes where I'm the paper on the house. People pay me their mortgage. My friend Glenn does my options trading for me, which is short-term capital gains. I have a crypto bot between Ethereum and Bitcoin where I get paid a little bit every single day. That's supposed to go away, but it's still working. I have 5 rentals and I have 7 seller financing houses. In 2025, I paid nothing in taxes on all my profits. It was beautiful. Now, this is a New York subject to real estate. It was a win-win-win for everyone. I had taken my friend Ingrid door knocking because she wanted to learn how to be a real estate investor. And we were leaving at each of the houses next to the garage and under the doorbell, a message saying, "You are in the pre-foreclosure list. I don't know why, but I have a way for you to save your house, 10 ways to save your house." I had Waxhaw 28713. This family contacted me. They were going to be moving from the Waxhaw area to Houston because of his work. They talked to a real estate agent. The real estate agent gave them a list of 19 things to correct, including redoing their kitchen, pulling up all the carpeting and tile, and painting inside and outside their house. They had decided they were 18 months behind on their mortgage during COVID. So instead of having a 30-year mortgage, they had a 32-year mortgage. They had decided it was going to go to foreclosure, and they asked me what we could do. I told them, have the movers come in, move you out. That was on a Sunday. The Saturday, 6 days later, we had an open house. I let all the neighbors know, the people next door, the people across the street, the people behind them, exactly what was wrong with the house. It was $100,000 below the lowest house in the area. And when the people came in for the open house, they got the list of 19 items and how much it cost to know what was happening. The husband and wife who won the bid, we got into a bidding war. When she walked in, she said, "It smells like dog." The dog had peed on the carpeting. And I said, "This is why you're getting $100,000 off the house. Maybe you want purple carpeting or you want gray carpeting. You can replace the carpeting." I paid off their mortgage. I did pay for 1 month's mortgage, water, and air conditioning. I paid off their mortgage. I gave them $50,000. My real estate agent who had the open house and the real estate agent who brought in a couple who bought the house each made 3%. And I made an extra $145,000 because we got in a bidding war. And at 24% on this one house alone, I saved $34,800 in interest income taxes on this one property. Now, long-term capital gains, when you sell your business. This came from a business broker. Husband and wife sold their business for $1.7 million. They started it on their kitchen table and had 12 trucks. At 15% on April 15th, 2024, they got to save $255,000 in capital gains. Or at 20%, they got to save $340,000 in capital gains. The business broker who brought me this deal made $1,000 because he's my affiliate. And then he also told the gentleman who bought the business for $1.7 million about the business trust. And when they bought the business trust, the business broker made an extra $1,000 on that too, or $2,000. Now, IRMA, this is what 3.5 million seniors pay right now. Every October, the IRS goes back 2 years. So October 2026, they're going to look at 2024 1040 tax returns. The supercomputers are going to take how much you're getting from Social Security, how much you're getting from pensions, how much you're making in wages, if you had a 401k withdrawal, if you had a SEP withdrawal, if you're making capital gains, interest income taxes, dividend income taxes, rental income taxes, and royalty income taxes, and add it all together. This is 2025 data. I don't have 2026 yet, but if you're single and make $106,000, or if you're married filing jointly and make $212,000 or more, you're going to pay more than $185 a month for Medicare. One of my clients, a husband and wife, who I got to help them save over $72,000 in dividend income taxes. I knew he was 70 and his wife was 68. I asked how much they're paying in Social Security. He was unaware, and his wife said we're paying over $600 a piece for Medicare. I got them to save them over $500 each. They do still have to pay $185 each, but now because they are older assets are in the Beneficial Spendthrift Trust, the IRMA surcharge goes away. They were ecstatic. Now, if you would like to set up a 30-minute tax breakthrough session with me, it's www.thetrustisyou.com/scheduling. I do have a free class on the Great Discovery, my first name and my last name. I'm redoing the class because now that you don't have to pay federal or state income taxes, you get to, but there you're going to get 3 articles from Forbes magazine. I did not write. You're going to get 2 pages of case law so you can research this to your heart's content and examples of clients saving thousands of dollars. I just want to say thank you for taking the time to watch my video. I want to teach as many U.S. business owners, U.S. entrepreneurs, U.S. franchisee owners, U.S. self-employed, and U.S. professionals, and all U.S. investors how they can save taxes. This is legal. It's in the IRS Tax Code 643B. Please set up a free 30-minute tax breakthrough session with me so I can show you how much you could be saving taxes. If you decide to go forward with it, I will send you the contract and you can start either saving with the Beneficial Trust or the Business Trust or with both of them together. Thank you for watching. Have a beautiful day. Take care.